Yeah, guys, again, leave us feedback. We always read your comments. We're always looking at what you're saying. We do read it, pretty much every comment. You might get snarky replies from me, but we do actually look for good feedback within there. So Chris Pulver's up next.
All right, I'm seeing some things popping in. I'll take some notes down, and maybe you'll see your request in a future video. So we're gonna run a quick break, and then we've got Chris. So here we go.
All right, cool.
Hey everybody, speaking of trades, DPZ, maybe one of the easiest $500 I've ever made. This was a trade that I took. I can show the alert here. So DPZ took the trade for $25 credit, closed it out today. It actually closed me out at the open. The broker closed me out at $20. I looked at the trade. I was like, that's crazy. Number one, I thought it was Thursday after market. Turns out it was Thursday before market. So the IV swell just quickly contracted, and that was an easy $5. It was trading for like $18.40. So I updated it right here. 10/10 earnings hit right before the market opened. $20 debit was filled. That was my price target of 20%. Let me do the math on that. So I took $5 out of a $25. So 20% take profit was pretty simple, and that was easy. Now, the max profit and everything, if you keep the trade going, basically it's still the same situation. I mean, if price is where it is and it stays this way through next week, then the full $25 credit can be yours. But if price goes above 450 or below 380, then there's risk in the trade. So that was a really easy trade, and I'm pretty happy that closed out with profit. I want to take a look at it right now in real time just to see where it's at. So that was an 18th expiration. The trade closed out right here. And I mean, even now, like, you're getting more and more decay. Like, this is ridiculously good. So getting out of the trade, I mean, I am going to say this. The broker filled me at $20, but when I checked the price, it was trading at like $18.50. And I'm like, you sneaky turds, because if I was getting the bid price or the mid price is what I want when I'm doing spreads, and it was trading for like $18.50 or less. Now it's trading for $16.77. So anyway, it doesn't really matter. It's just I put in the order mechanically. 20% take profit was fine, but anyway, that was a nice little chunk. If you're in the trade now, if you took the trade with me, you are looking at a gain. So 25 minus 16.77, you're looking at $823 a contract. So not a bad trade. And all price had to do was not do anything crazy for earnings. And realistically, this is good. The fact that we closed and opened right next to each other is not usually what you see for earnings, right? Usually you see the big reaction in earnings, and today is a big candle so far. But what you usually see is, earnings is down here with a big gap lower, big gap higher. And the fact that we stayed in that area was perfect. Okay. So I'll be happy. I'll stop complaining. I've been complaining all morning, actually, watching the SPY levels on my gamma squeeze index light up and go both places. I'm closing out and taking new trades. So I'm a little all over the place today, even though the portfolio's up. Let's talk about the data. I'm sure Nick addressed it earlier this morning. Any thoughts, any opinions on the news today? I didn't really think the news was super upbeat and optimistic. So I took a screenshot on the Bloomberg economic calendar. So we have jobless claims that printed higher. We have the unemployment claims that printed higher. If I go to, here's FOREX Factory. So 231 forecast came in 258 on the unemployment claims. We go to the Bloomberg print for the CPIs because I want to get the year over year for the core CPI. So we have the month over month core CPI was up 0.1%. We have year over year core CPI from 3.2 to 3.3, so ticking higher. And we have the month over month CPI ticking higher by 0.1, and we have the year over year ticking 0.1 lower, but actually missed the forecast. So rather than being 2.3 as the market was anticipating, it was 2.4. So inflation ticking slightly higher. Core, which excludes food and energy, is actually higher. Okay. So I didn't see this as a great thing, but maybe the market's over this whole inflation thing. At least today's price action, it seems to be. So prices today moving around all-time highs and watching these levels closely. Futures market this morning, We haven't made a breakout. As we are trading this morning, I might jump into a futures trade with you today. Not often tonight can I get the trade as cleanly as I want, but because the reaction was so aggressive at 8:30, here is my NQ top to bottom, and I'm looking to see if we get a close outside of it. So I have my 15-minute chart right here, and then I have my 5-minute chart here. So this is the ES feed. This is the NQ feed. I can either trade the ES or the NQ, or I can trade the MES or the MNQ. If we get a breakout this morning while I'm in session, I will be probably taking a futures trade this morning. I do have a couple of trades in. If you're interested, you can take this trade with me. I have a, let's go SPY. I put it in this morning. I really don't love it right now, but this is what I'm doing. I have a long put at 568 and 567. These should be closed. Hang on a smidge. Just going to double check these. What was that one there? Okay. So I got those as a, oh yeah, that's the chunk of trades right there. So this 375 debit, not looking too great. So for 375 debit, let me see what it's trading for right now. I don't want to bail on the trade, but this is outside the expected move for Friday, and I could probably salvage a small loss here. So 42 plus 33 plus 27. So for the 373 debit, I can close it out for $1.02, and that would be 373. So I take a 271 loss on the trade. I think I'm going to do that. So here's why. Right now, I'm looking at price today. It seems to be pretty quiet, which helps my my SPX trade this morning. I'm going to take a look at that one as well. But the one level that stands out is 580 on the SPY. I had a 570 and a 567. Those are no longer looking as prominent. But let's see. Do I want to save the dollar? I think I'm just going to give it a chance. I'll give it a chance. I'm going to let it marinate. So here's why. If we break this low convincingly and directionally, then we could actually have a decent decline. I do think that any momentum to the downside will be pretty fast and pretty aggressive. We're just not getting really any pressure to the downside. So I do have this trade still running, and I'll let that marinate. So I'm willing to kind of take the full loss here. I'm only going to save myself $1 right now. If price does go down at all, if price goes down, then these will all increase in value, and I can reduce the size of the risk. If they go down a decent amount, then I can possibly carve out a small gain. So these are all to Friday's expiration. So we have today's trading and tomorrow's trading, and I'll see if we survive it. But price-wise, today seems to be pretty quiet, surprisingly quiet. And here's my futures feed. So I don't really have any direction. The one thing I'd be going at if I did take a futures trade this morning would be if we get a breakout, I'd be going right back to this weekly VWAP and trying to move my stop loss. So same thing here. If we break below, there's the weekly VWAP. So I'm trying not to trade too early, but what I look for is this. If we come all the way back up to the same high and we reject, I might take a sell trade early and see if this goes down to the lows and I can move a stop loss in and then try to get a head start towards that weekly VWAP. So I don't necessarily have to just wait for the break of the lows. If we come back to the highs and we bounce and reject off of that, I might take a trade up there with a tight stop loss. So I do want to keep an eye on that one for the morning. Looks like the NQ will do a snail creep up. Yeah, maybe. I mean, this is the 15-minute candle from the news this morning. So if we come up here, I'm going to look for a rejection. And and the price could just stay inside this range, and it could be like just a complete noisy day and nothing really happens. Okay. All right. So keep an eye on that this morning. Domino's is a nice little win out of that trade. Delta Airlines, I think, has earnings later today. Yep. So earnings will be, that's a miss, and price is choppy. So just initially, Domino's Pizza and Delta, look at the earnings report. Okay. I mean, the candle itself is pretty big, but you notice how this is not really a massive gap higher or lower. I think if we get these earnings now through October before we actually have the election, everything appears to be a little bit more contained. So this is giving me, I'm leaning towards more selling of these earnings reports as opposed to buying. So as an example, let's talk strategy for a second. If I can get a trade where let's say price is, I don't know, let's say Netflix. Okay, I'll price out Netflix because that's going to be one. That's going to be one that moves next week. So Netflix is next Thursday, and we're trading at 725. Now, I already have a trade on Netflix for this is a 111 trade, so it's a 600 by 595. That's an income trade, and I'm also willing to own some Netflix if needed. But if we have an earnings play that's going to be this huge gap up or huge gap down, let me price this one out for a second. So this one usually has a pretty big move, and sometimes it exceeds it, which makes buying options even better because you don't cap your upside. So if I go Netflix, the average move on Netflix is around 11%, and we've had some big ones recently. So 18, 18, 22, 17, 9 and change, 9.92, almost 10%, 10.46, 11.8, 12.8. So the average is 11.89. If I want to be really, really conservative, I can say 11%. Well, 11% of an earnings move on a $726 stock is an $80 move. Okay, that's a lot. An $80 move is a lot. So what I want to see is how much is the broker going to charge me? What are the market makers asking for? What's the premium priced at if I'm looking at an $80 move? So if we go to Netflix, which is next week, earnings is on the 17th. I wouldn't do an expiration on the 18th. I'd probably go to the 25th. This is only priced out to be about $64. Okay, so I'm looking for about an $80 move, and the market maker here is showing about a $64 move. So if I bought the option, it's still going to be expensive because it's a $700 stock. But if I bought the option, chances are I can get to that $75 or $80 price point and turn this into a win. So here's an example. If I were to buy the 727 call and then buy the 725 put, so I'll kind of go one strike above and below center price, this is going to ask me to pay $63.50. But based on the averages, and here's what I want to check before I'd say like, oh, this is a great deal. I want to see how many times in the last 10 earnings reports have we at least gotten to 11% in Netflix. So if I can see that 11% has been hit at least, 6 or 7 times out of 10, chances are we have a good enough probability to say, okay, I could consider going long the option, and price does make that, $75, $80 move. If we have a bigger move than that, that's bonus. That's the big bonus. All right. So let me check something really quickly on this piece here. Let's go post earnings. And how many times do we get to 11%? Not there. Not there. Yes. Yes. We get to 10 and change, 13 on the final day. I'm going to say no. No. Yes. Yes. This one's the final day. I'm going to cross that one out, and then yes. And in typical fashion with earnings, it's a coin flip. 5 times we did, 5 times we didn't. So do I want to waste or spend or risk $6,000 on this trade? No. So what I'll probably end up doing is using option spreads. So what I could do on Netflix would be something like this. I could take a in the money, if I go in the money bull call spread, in the money bear put spread. So I would buy a call, sell a call, buy a put, sell a put. And if price exceeds those levels, I try to have, you can usually set these up where you can get like a, close to a 3-to-1. So you pay for it. It's a debit, but there's no risk of assignment. And if you're right, they pay bigger. And if you win one, lose one, you actually walk away net profitable, and you can play both sides of the trade. So something like that is something we can price out next week for Netflix. All right. So anyway, that's for us to discuss more next week, closer to earnings. The big earnings we have today was Domino's, made some money on that one. Tomorrow, our financials, we have Wells Fargo, JP Morgan. I did take a look at those. I don't know, I might actually look at selling some more premium here. JPM is 213 right now. Let me see what the option trade looks like. So JPM, expected move, earnings is tomorrow, should be pre-market. Yep, so it's going to be tomorrow morning. And I don't think this is going to be a huge mover, but let's find out. JPM, and then I'll go through some analysis, see dollar yen's being requested. If you have any other charts or questions, let me know. Watching, I'll just keep checking my futures prices here for NQ and ES to see if anything's giving us breakouts. SPX on the day is pretty quiet, which is annoying, kind of. SPX on the day, I got out for a small break-even trade, and right now it's already profitable. Son of a gun. Well, that's annoying. All right. 1 second here. Okay, so top down, let me get rid of some of these moving averages here. I'm going to price out a JPM in a little bit with all of you. I'll keep spot checking my futures trade. We're leaning a little bit lower now on the NQ. I've got Heikin-Ashi candles on my feeds here for the 5-minute to try to keep the trend bars really simple to read. I would rather, like I said, I'd rather not sell the lows, but if we get a nice clean breakout that's fine. I'll see how that volume plays out. Pen, dollar Swiss. Yeah, sure. So I'll do dollar yen, dollar Swiss. Pen is in Pen Gaming. I have one client that gave me a pretty trashy portfolio that had Pen Gaming in it, and not in a good way. So Pen Entertainment. Here's what I'm going to look at. Snowflake analysis. Do they make money? Okay. So a couple things that are positive here. Earnings forecast to grow a ridiculous amount, trading well below estimated value. There's a lot of potential here. I mean, price to sales, price to earnings are terribly low, which is fine. This is pretty impressive that based on the discounted cash flow model, it is completely undervalued. But I don't know what it's going to take to get this thing to turn up. Okay. Now, I look at this chart, and I would be more concerned if I looked at it fundamentally. The stock's down 90% from the all-time highs, which during COVID, I mean, you talk about a potential $3 trade to $100 and some dollars. I mean, who wouldn't love some of that? But this is why you can't fall in love with a stock. And this is why, truthfully, if you want to be a long-term investor, buying the haystack is a lot better than buying individual stocks. And the reason why is this. This thing is up thousands of percent. Okay? It is up 3,700%. But none of that matters when you're sitting in a 90% pullback. Right? Even if you were the most disciplined trader of like, oh yeah, we've got past resistance here. We got a Fibonacci 5.0 and 618. It's going to go up. 90% pullback. Buy the haystack. Okay. So is there potential here? Yeah, sure. Is there risk in the trade? 100%. So I look at this chart and I would say if we're carving out a floor, that there's ways to have some exposure. I don't mind putting in a trade on Penn only for income. Okay. If I buy the shares, they could go to zero. If I sell credit spread, or if I sell an option and I can collect some income, I don't know if the premium is going to be good or not. But if we just go up directionally, once we get this confirmation of like, okay, how long does it take? How long does it take for this to break a trend line? How long does it take to break a trend line? Maybe this is what the stock is doing technically. It's just getting into this big wedge, right? Connect the lows this way. Let's say we connect the highs this way ish, something like that. Well, this could spend, just like it over here, lots of time going sideways, lots of time going sideways, lots of time going sideways. So if I can get something out of the way that at least helps me generate some income, that to me is a better trade than trying to hold this thing directionally. I have a client that's in probably a $20,000 drawdown when I absorbed his account, and Penn Gaming was one of them. I'll show that right here. So I believe it's this account with Penn, and there it is. So Penn is down $34,000. So what am I doing? Am I doubling down on this? No, I'm just waiting to see if this account will ever get back to a break even or better. So I've got a limit price here at 60 bucks. Okay. Now 60 bucks is where on my chart, 60 bucks is this really nice inefficiency that if we have a liquidity grab, I'd love to see if it comes back to find this inefficiency. So would that make some money? Yeah. 700 shares. Do the math here. If I have 700 shares at $60, that's 42 grand. Well, I'm in a $34,000 drawdown. That makes $8,000 of profit. So is it wishful thinking? Yeah. Is it going to hit there? I have no idea. But if I want to take a trade on Penn, I'm actually quite surprised that this snowflake analysis is decent. There's no risks in the trade, even though the stock's down 90%. The one thing I'm surprised with is it doesn't say was. By the way, does anybody know if Penn Gaming was a SPAC when it went live in the market? Was it a SPAC, or has it been around longer than that? I'm just curious because there's still like this weird like punishment for SPACs since like 2020, 2021. SPACs were like the easiest trades in the world because it was like the fast track IPO, and then they turned to absolute trash. So anyway, I don't know if it was or not. Are you that client guy? So I'm surprised that it says, there's nothing about like cash flow. There's nothing about, level of debt. There's nothing about unprofitable. So let me check one more thing here. It Barstool Sports, and that's why it pumped. Okay, let's go to Penn. So cash wise, we have it. We do have some. So they have debt. Earnings, forward price to earnings. I'll look at like 5 years. So this year, earnings per share. Next year, earnings per share. 5 years out, realistic. Insider ownership, okay. I don't know. It looks okay, but it has some cash. It still has a decent amount of debt, but it's not a flag. I see a lot of stocks here. I was trying to think of one. I can't think of what it was. Maybe is it SoFi? Maybe it's SoFi. Like this stuff makes me nervous, right? It has less than 1 year cash runway. I did this a couple weeks ago. I just can't remember what stock it is. RKT. No, that one's okay. I basically look for something that doesn't make any money. Like, oh, not going to be profitable for another 3 years, or earnings are decreasing at blank percent per year for the next 3 years. Stuff like that is like I stay away from those stocks. So anyway, while we're talking about this, I'll just take a look at the trade itself. We have weekly options. If I were to go out and say I'm going to do a leap, okay, so I can go out to June of next year, or I can go to January of 2026. I don't really want to take this trade, but I'm curious. Let me see. Right now we're trading at 1850. Well, I could set up a ratio spread that if I sell that 1250, okay, so I could get 52 cents credit on the trade and own the shares. I probably won't take this trade because it's not giving me enough credit. But if I own the shares, it'd be 1250 assignment minus 250 on a bear put spread minus another 52 cents. I could own the shares at $9.48. Now, does that mean it's a good thing? Not when the stock was $4 during COVID. The lows that I see here recently that we've started to carve out some base is around, I'd say like $15 or $14. So realistically, I think a simple trade would be this. If you didn't mind tying up the capital, sell a put at $12.50. You get $1.26 credit, and there's two ways to trade this. One is if you say, yes, I'll own the shares at $12.50. Well, if I took the assignment, I'd own the shares around $11.25. That's cheaper than the current base we have, which is the low around $14. Okay, so I'd own it around $11. That's okay. But the question is, how bad does this stock get? Right? If it comes down to take out the low and it takes out this low, I mean, I would say this type of price action would be better to then say, okay, maybe I could put in that put, but there's still risk in the trade. So I think my exposure is through the client that already has it. If I can get a squeeze to $50, $60, break even's great. $60 limit target is $8,000 in profit, but a lot of good things have to happen for that to be the case. So I don't know what it's going to take to do that. But here's what Nick and I actually talked about this week. If we see the market as a whole is so excited to be in a bull market, guess where these like flows go? They go to stocks like this, right? Stocks that have been down 90+%. The pure value that's out there of like, this stock's down 90%, buy it, you know? And if this stock, even though fundamentally it may not be the greatest thing ever, if stocks like this turn into these big hundreds of percent gains and thousands of percent gains, there's going to be a top coming at some point, you know? And I swear, if we have NFTs coming out of the woodworks and all of a sudden becoming popular again, which I don't think that'll be the case, but something along those lines of like people are throwing money at just absolute garbage, then I'll be concerned that a top is around the corner. You know, that was 2022. 2022 was a pretty harsh reality, and that was mild, by the way. 2022 was a mild bear market for 25 to 35%. It can be way worse than that. All right. Anyway, let me get some other charts here. Anything on futures yet? Nope. Still choppy. Okay. Let's take a look at the dollar today. Currency strength chart. So we've got the yen on top, Swiss on top, dollars base, CAD is down, pounds down, and euro down. Dollars in the middle, Aussies in the middle, New Zealand, Swiss, yen on top. Interesting mix today. Pretty quiet volatility on the FOREX side of things. So dollar index right here. 103.03. I'm watching this to the 103.50 to 104 level. I mean, the dollar's maintaining a little bit of bid. It's making higher highs on the daily chart. I like this 103.50 to 104 zone. If the dollar's going to reject, that's where I'm looking for price to reject. Right in the area. So I'd be watching price pretty carefully, going down to smaller time frames, looking to see if we have some confirmation, and then start looking to fade the dollar move a little bit. Okay. Oil a little choppy, a little volatile. I said this week. I'm happy I'm out of the oil stuff. I don't want to be with any type of crazy exposure outside of defined risk. Same thing on CL, NG. NG is dropping. I'm still going to trade natural gas if we come back into the low twos. Gold is up on the day, but still, you know, we are getting a bit of a pullback. I'm surprised that dollar's up and gold is up today, but not a bunch. I mean, gold's up 0.69%. Silver, nice little bounce off the backside of the trend line. Hopefully there's more stability here to see if silver will get back to recent highs at 33. Bitcoin falling. I wouldn't mind Bitcoin falling into the low 50s, but, you know, we'll see. I know everyone's all excited about this Uptober move in Bitcoin, or this, like, you know, November, December has been like some of the biggest stretches and biggest gains in Bitcoin. Maybe this year's different. Maybe it's not. I think a lot of this is we've got to get through the market's tension and anxiety of like maybe the election. I don't think the election is really that big of a deal. I mean, it's going to happen whether we want it to or not. You're going to have a president you either like or don't like, you know, and you're going to be stuck with a House and a Senate and a president that is probably a gridlock scenario. So that's typically good for the market, and we'll see if that's the case, or if there's one side that wins everything, and that's the problem that I see, because that'd be the potential policy shift. But if it's gridlock, I don't think the market cares. But Bitcoin is flat. We're still in this like weird, slow, choppy accumulation phase. MicroStrategy had an interesting move. We did fail at the all-time highs here. We pulled back a little bit. Let me see what the IV rank is on MicroStrategy. I'm pretty interested in. I do think this: if MicroStrategy somehow pulls back to like 160, I might put in a dollar cost average position here. I might do $1,000 there and $1,000 there, and then the rest of my income trades. I've probably made $3,000 or $4,000 per account on just trades like this where it's like $2 credit, $7 credit, $5 credit. I've done this like every 2-3 months, but I'd like to buy this thing if possible halfway all the way back down here to support, and then see if we get back to the highs. So could I take a $1,000 position, $1,000 position, take a $2,000 cost average and turn it into a decent gain? I think so. I'm ballparking that, but take $2,000 and turn it into $3,000. That's not bad without having a ton of money tied up into it. Okay. Wheeling an index like the IWM with daily at the money cash. Let's see, money, cash, secured puts, and then covered calls. So are you talking about, do you own the shares, Kyle? Do you own shares of IWM? Or are you trying to just trade and generate income without it? It says cash secured puts is a sell put, covered calls is a sell call. You're essentially looking to you're talking like doing a daily strangle, which is okay, but daily strangles, daily strangles, you don't get a lot of income. So the IWM is going to offer you next to nothing as far as income goes. If you want to do something along those lines, you're better off trading the actual like Russell futures market. So if you looked at possibly the RUT or the RTY or the M2K, trading some options and futures, you can get a little bit more bang for your buck there as far as making some credit day to day. Because if I show you the IWM and we did a 0 DTE, I mean it's a slightly higher volatility index. 44 IV rank right now. But if I did a 0 DTE, I mean, this expected move is less than $1. You're going to make pretty much nothing day to day. Now, if you're not using it necessarily for income, but using it to lower your cost basis, that's okay. But that strategy you're talking about is probably better served for like a 30 to 45 to 60 day expiration. Day to day, it's going to be no good. Okay. That's pending. That hasn't been filled yet. I need price to come because I want to get filled at 40 cents. Price has to drop down towards that $200 level. Oh, so you want to just straight up like put in your sell puts and then get assigned and then wheel out of them? Yeah, I mean that's a strategy for awesome. That's always a good strategy. If you're willing to own an index, that's a great strategy. So what Kyle's asking about is if I put in a sell put here and then price gets assigned, okay, and then you put in a covered call. The most important thing is you got to calculate your break even. So if Kyle put in, I wouldn't do it day to day though. I honestly wouldn't because you're not going to collect enough premium to do it day to day. I would definitely go out 45 to 60 days and then stagger that because you could go 45 to 60 days, maybe collect $1 credit, $2 credit. And if price goes higher, you're likely not going to get assigned. And that credit you get, you could take a profit on that. You could take your 50% profit and then reallocate it. But if I did that let's say I did it every month I just put in a put and I sell the put. Well, that price goes higher. That's income at this month. I do it again, income this month, income this month. I mean, you could have months and months where you just generate income and never get any assignment. But if you do get assigned, you have the assignment price minus your credit, and that's your break even. And then you wheel your way out of it and just turn a profit. So if you did that on the IWM, totally fine. Do it on the QQQ, totally fine. Do it on the SPY, totally fine. IWM, because it's cheap, it's good, So yeah, it's absolutely a good trade. But like I said, go out farther. Day to day, you're not going to collect enough premium. It's not that good. So if you're going out 30, 45, 60 days, 90 days, you can stagger those trades where I wouldn't mind doing that trade like every 2 to 4 weeks, but you can keep adding those trades in mechanically. And if you get one assignment, then obviously you're not looking to take the other assignments from other sell puts. But that's what you have to be careful of. You got to be willing. There's a lot of risk in a naked put, right? So you truly have to be willing to, if you take on shares, consider having some protection. Because just having a put there and having one assignment at a time, you're not really going to make a lot of income. But you have to be pretty committed to say, I will own the IWM and just own it. And that's okay. Because this, like the SPY, like the Qs, I mean, small caps have been underperforming, but it is still meant to be an index that goes higher. Okay. All right. So a couple of the questions here. Dollar yen. Let's go dollar yen, dollar Swiss. I saw pound yen. I saw. So dollar yen. These are the pullback levels that I'm watching for. I don't know if we're going to come back and take out lows or highs. I realistically think that if you're a dollar yen trader, you are going to be dealing with some indecision over the next probably 3 to 4 months. Okay. Now, I do see a lot of activity on the Japanese yens like late in the year, like December and January. It wouldn't surprise me. This actually would be a pleasant thing, in my opinion, because this low is in here. Don't be surprised if this is a swing. This is a reversal pattern, and we pull back into this area here and then push back up again. So if I draw this out, here's my bigger swing to the downside. Okay. And then we have a reversal pattern in the mix that can push price back into this area around 152 to 155. I would love for this to be a bigger swing trade where we don't take out the high. We have a lower high, and this actually, destination-wise, is going to go lower. I'd love that trade. And through all this nonsense, this could actually be a really good setup where it's high to low. We have a low to high, higher low to higher high swing. Okay, that could be a nice fancy harmonic pattern, and that's a great spot to look for an entry. If you enter here, stop loss above or stop loss above, your destination could be all the way back down to the lows or down to symmetry. So I do like the trade, but where would I look for the trade right now? If we have a pullback on the dollar yen and this forms a higher low, I think the dollar yen has that trade coming. So there's two ways. Either one, this keeps going higher, 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 higher. I'm going to look to sell that around this 152 to 155 zone with confirmation, or we have a pullback first, a higher low, and then we have a trade to the upside in order to get to that level. And you can box this in, right? You could take this trade right here, go from a low to low to a high, and if we have a pullback, project your symmetry. So it looks something like this: low to high, low to high, higher low to higher high. So there could be this trade coming on the dollar yen to be long and get some confirmation, stop loss below the turn. And then we get to this level here, look for confirmation, stop loss above or stop loss above the major swing. Right? Something tells me that this move we saw in July to August on the Japanese yen was so big and so important that we're likely not going to take out the highs and not going to take out the lows without something more meaningful. So if we have another unraveling of the carry trade, more deleveraging with the Japanese yen, then maybe we can come out and test the lows or take out the lows. But until then, you can put me on record here, October 10th, 10:55 a.m. I think this trade stays between this high and low for months. And so you're going to have to survive in the chop. That's what I think. Yep. So Jacob says it's been hard to trade these Forex. I see it, because the Japanese yen was extremely disruptive and the dollar was, my least favorite index. I mean, the dollar was crap for months, and then it finally trended for a few months, but not every currency pair was reflecting that straight movement. The dollar went straight down for 3 months. The only trade that looked that good was the euro dollar going up. It was the only one that read the same way. Euro dollar goes up and the dollar index goes down, but the Aussie dollar swung both ways, the New Zealand dollar swung both ways, pound dollar swung both ways, dollar CAD swung both ways. So the dollar index didn't line up with really anything. So I've been really vocal about that. I thought the dollar index was really difficult to read this year, So I will say this though, for a couple of the pairs, I mean, Aussie dollar on this chart, look, I don't care what the Aussie dollar does right now, but I will say that if it comes back down to this area here, I'm going to be a buyer of the Aussie dollar. No questions asked. 64, 63, 62, even down to 6,000, I will dollar cost average into this move and buy the Aussie dollar. Now, if it doesn't get there, okay, well, what's next? Does this make a higher low, higher high, higher low, higher high? I mean, is it that type of crap? I don't know, maybe. But if I'm going to ask, like, okay, price, what do you want to do? I'd love for price to come back down here, find support, and buy this thing, turn this into a nice position trade, dollar cost average into it, have price go your way. You can make a ton of money in a trade like that if you're patient, right? Buy low, sell high. That's a great trade. New Zealand dollar is the same thing. I like the New Zealand dollar. Okay, I like the New Zealand dollar. Where? Right here and right here. So right now, do I want to do anything with it? Nope. I don't care. I missed the trade at resistance. I'm not that interested. But if we end up falling down to support, I'm interested here, and I'm interested in building a position. So from 58.60 down to 5,600, I could space myself in every maybe 100 pips or so and have this thing turn, get back to all this choppiness around 6,100. That's a good trade. Get back to this high at 6,300, 6,400. That's a better trade. But you can buy in small and you can add and you can turn this into a huge winner. I love that trade. Dollar CAD, same thing. Like, these are trades that I will be watching. I love these trades, but you notice how price has to come to me, and this is the hardest part. If you're not patient with some of these big position trades, you get bored and then you get antsy and then you feel like you got to force trades and find something else. And you're staring at 28 currency pairs and you're like, oh, this looks good enough to trade. I'm over that. I want to trade what looks really, really high quality. So dollar CAD, again, I want to trade it. I want to sell it here. I want to buy it here. Okay. I was thinking that this little sell-off would just be a pullback and we could see the dollar CAD go lower if oil prices jumped up. Oil prices are choppy. CAD economy is a lot worse off than the dollar right now. The Bank of Canada is way more dovish than the Fed is right now. So there is a chance, by the way, this has been a multi-year range. I want you to put this trade on your radar. If this trade goes to the highs and shows a rejection, that's a nice sell trade with a tight stop loss. If this trade gets above 4,000, do not hold short positions. Because something tells me that if we break above 4,000, this thing has been in a multi-year range since 2022. This range could be a breakout, and this trade's going to 145. So there's two trades on the dollar CAD. Either we get a sell trade at the top, or we get a buy trade at the bottom, which seems like it's way far away, or we get a breakout above 39 to 4,000, and this thing is going to make its way up to freaking 4,500. And that's a nice, easy breakout. Because we've been sideways and we get a clean breakout, we just measure the move, and it's going up to measure that. It's the same measure move. We go from this low to high, okay, and then you stack that on top, and there's your dollar CAD. So if it gets above 139.50, 140, and it stays up there, I've got this conservatively projected around 4,500 to 4,550. I would love that trade, even though you're buying it high, right? If you're buying it high, but look at, if you buy it high, let me use a straight line. If you buy it high, but it pulls back, there's your bottom, right? And then you're still buying low on all these continuations to the upside, and there's your breakout trend. If I have 400 to 500 pips of open space with high probability and confidence, I love those trades. So yeah, if I see that trade, we're taking some campaign trades in the Pulver alerts, and we're gonna go make a good chunk of profit on some of these big open spaces. Okay. All right. So just a little outlook there. Pound yen, like same thing on the yen crosses. Pound yen, we're probably going to be stuck within a range for the next couple of months. Okay. I had mentioned that this is probably going to hit symmetry. You see that it's really close to that. We have this low, this high, higher low, higher high. I think this grinds out a little bit more symmetry to the upside, but I would expect this to not break the high, not break the low, probably stay like this for a while. And maybe this sets up for a really nice, at some point, like this is a crown pattern to me where this is a left tip, center tip. At some point, this right tip area will hopefully follow through. But we're going to have more deleveraging, more risk off trading. Japanese yen gets stronger, and it's probably not going to be a pleasant thing, right? But there is a lot of potential. The problem is, if the Japanese yen doesn't do anything or the Bank of Japan doesn't do anything, this trade's not going to do anything either. So don't get overly excited about holding pound yen short when you're going to pay negative swap every single day, and it could take freaking months to work out. So I'm telling you, man, I feel so bad for traders that are trying to trade the Japanese yen thinking they're going to make so much money. I mean, show me a trader that consistently, year after year, makes a lot of money on the Japanese yen. Because I know one that does it. and he trades a 1-minute chart on the pound yen and he scalps. That's it. That's the only trader I know that makes money consistently, with the pound yen being one of his favorite currency pairs because it's good volatility. Other than that, if you're a position trader, negative swap is a thing now, and it is a big thing. Like you could get charged as much as $5, $6, $7, $8 a day just to hold this position. It adds up. You hold a position for 2, 3, 4 months, you're down hundreds and hundreds of dollars with nothing happening. So it's just not my favorite. Okay. All right. See some questions on gold. Dollar Swiss. I saw the post earlier as well. Dollar Swiss. I'm still bullish. Okay. I talked about this one yesterday. I'm bullish on the dollar Swiss to try to get back to 9,200. This might take a little bit more of a team effort by the Swiss, not just the dollar. So yeah, I want to see the Swiss get weaker. They've cut rates down to 1%. There's slight swap in that one.
Hey, Chris.
What are you doing? You kick me off?
What's up?
You coming to kick me off?
No, I'm coming to join you.
Man, joining in late, bro.
Are you getting off now?
I was
Thought
getting
you
on.
go to
I'm good. No, I'm
11:30.
good, dude. I'm good till like 11:15, 11:30.
Okay, cool. So what's been going on with you? What are you looking at?
I'm doing some currency stuff. Actually, I'm getting a little bit more excited about some big currency trades. I just need price to cooperate. So I'm in the dollar Swiss. Here's where it all started. So when we had this crash, I was in dollar Swiss there. I waited for this trend line to break. I'm trying to get back to this pocket. So I started a little dollar Swiss. I added to this trade. Once we pulled back, I was adding more and adding more. And I've been waiting for this trend line to break, adding more down here. So long story short is this. I've positioned myself where if dollar Swiss gets all the way back up to here, every one of my entries that I've taken for the last couple of years is all in profit. So 9,200 is my target, even though I do think this trade gets back up to 96 or 98.
Gotcha.
So if you're willing to hold dollar Swiss long enough, I think we're coming back to 96 or 98. And
So
so
you think the dollar is coming back then?
it's not the dollar, dude. That's what I was saying. It's like I think this is also an effort from the Swiss franc to get weaker and offer risk on trading. If we have risk on trading, the Swiss, the yen, the dollar all can get weaker, but the yen could be weaker. Or I'm sorry, the Swiss could be weaker than the dollar, right?
Yeah.
But to me, this is one positive swap trade that I can take that doesn't have the insanity of the Japanese yen. So I'm going to hold dollar Swiss long, and technically this one tends to cooperate a bit more. And I'm just hoping that the Swiss across the board is still like very strong. If you look at like the weekly and monthly charts in the Swiss, it's still like one of the strongest baskets out there. So I'm trying to, capitalize on that but I mean, I've been saying that and I've been in the trade since like late 2022, early 2023. So here we are almost a year and a half, 2 years into the trade, and I'm still holding it. So do I look stupid? I don't know, but I'm up like $7,000 or $8,000 right now in Swiss profits, and I'm still holding. And if I do hit my profit targets, I'll probably make, I don't know, I should make probably close to like 50 grand. And that'll translate to a lot of, it'll be, I don't know, maybe $250,000 to $300,000 profit when it's all said and done.
I guess
But
it's
it's gonna
more
take
of
a
an
while.
investment then.
It is an investment. It's definitely an investment trade for me. It's a position trade for me. When I do this, I am probably stubbornly committed to the trade. But somebody asked me in a one-on-one session, somebody asked me, what happens if price goes against you? Well, here's what happens if price goes against me. Even though I have all these entries, I'm still willing to close them out if they look really crappy and close them out in chunks. So what I do is I stay committed to the overall trade. But if I take a loss, like let's say that this first like chunk of trades, if this first chunk goes against me and I'm thinking that, okay, I just need to get rid of these, like, and I trade like this is kind of a bad example. A good example would be the drawdown that I carried on the dollar yen in 2022, like an idiot. Here's a good example. So when this thing went up during 2022, where was it at? Seems so long ago. When did this thing start to rip? Here's the pot. Yeah, this trade, like an idiot. I started to get in this trade at 120. Okay. This is worst case example, but I will show you how I survived the trade. So I started to trade this at 120. When we had this first spike up, I put in an order right around 120 and it spiked up, came back down. Now I still held the trade. When it went 1,000 pips against me, I closed out for a loss and I reestablished new positions. So I took a loss here and then I reestablished new positions. Okay. It went against me again. I took another loss. I reestablished positions. It went against me again. I took another loss. I reestablished positions. Now, when I say reestablished, these are like small chunks and I'm getting back in to match it, and I was waiting for confirmation. And once we started to see this, I started adding more to my winning side. So yes, I took loss, but it was manageable. I think I lost about 3% as this went up. And as this came down, I stacked on 3, 4, 5% of trades and ended up getting about a 10% net winner. So
you just kept taking small positions?
Yep. And that's usually, so when I'm talking about like investing in Forex, I take a lot of small positions. I'll build up, like I was probably in 20 trades or so on the dollar yen.
Why are you trading against it in 2022? Just wondering.
Great question. Well, here's what happened. So when we had this move right here, there was a 200 moving average that hadn't been hit for like 300 and some days. And I'm like, well, that's overextended. We're going to hit like maybe 120 resistance, then fall back in. Well, it ended up going up to like 400 bars, and it still ended up coming all the way back down to it. But what I also did, realizing like I'm a fool by trading this thing short. So I was long on the Aussie yen. So Aussie yen, I'm long, and I was long on the Euro yen, and I was long on the New Zealand yen. So I hedged there, and I was short dollar yen like an idiot that had to survive the trade and put myself through a bunch of stress along with negative swap. So it was not a good thing. And it also was just painstakingly annoying like all year, because I saw that I'm wrong, but that's why I had the discipline to at least close out losses and not let it get worse, because it is far worse. If I took this trade right here, Frank, and I held it all the way thinking like how to come back to break even, I mean, I could have taken 0 losses, but the amount of drawdown I would have dealt with a 3,000 pip move against me is not worth it. I've been in that situation before, like trading the peso and crap back, 10 years ago. But with this move, it's like, look, just cut it. Just cut it. I can always get back in, and then I can work my trade size. So once we started to see this, amounts of manipulation topping here, I started to add more to it. This one waterfalled into a nice little win. And so the loss, I was hedged positively on other currencies, which was good. And then this one, I essentially just fought myself into a profit. So I ended up netting profit on the dollar yen, having those hedge profits on the Aussie yen, Euro yen, pound yen, New Zealand yen that were fine. But I fought the dollar yen and Swiss yen for the entire year 2022. But at the end of the day, I mean, I made money. It wasn't fun. I don't recommend anybody has to go through that. But my point is, this is why the yen sucks, number one. And this is why in the dollar Swiss, if it went against me, I would still have a plan to exit some of my trades and then just let price do its thing. Like, I don't think that the dollar Swiss, outside of like a flash crash lower, which actually would be a beautiful thing. If we flash crash to 8,000, this thing's going to come all the way back to 92 and probably get to a parity level, right? If the market cleanses itself and there's no more sellers, this is going to go back up. Traders may absolutely hate flash crashes, but the reality is they are bottoms and tops in the market that you can make a killing on. But the thing you have to do with the flash crash is you got to survive them. And if you're trading too big, you can't survive a flash crash. So I trade small. Anyway,
well,
fun story, right? And your question is great. Why were you? I mean, if I showed anybody the dollar yen, you're like, and you're selling this? Yeah, I know. It was stupid.
Well, I was just thinking, like, the reason why I've been bearish on the dollar and dollar yen was kind of for the same reason why I think I would have been bullish in 2022. And that's just around monetary policy.
So the question for you is, were you bullish?
No, I was out of the markets that year for the most part. I held on to whatever I was in at the time. I think I had Tesla. But I was in school, so I didn't really participate or do anything, let alone have like any money to invest.
Right.
So
you can just judge me from afar then.
Sorry, I didn't mean to.
I'm kidding. No, I'm kidding. I deserve it. But like I said, I walked through the trade. I lived through the trade. And I mean, on the positive side, I survived the dollar yen, as dumb as it was. And it just continued to feed my theory, which is I should just never trade the yen ever. And I know, 2022 wasn't it. In hindsight, it was an easy year, right? In hindsight, I had so many good trades in 2022, but like the fact that I was dragging that bucket of cement of garbage with me. It put a sour taste in my mouth. And then when 2023 rolled over and I was getting positive swap, I'm like, finally, because I was actually like, all the interest rates were being hiked. So in 2022, you're getting the dollar up to 5+% interest rates, and the yen's at negative 0.1%, and the Swiss is down to, all these things were still like negative swap. It's like, how am I paying negative swap? How am I paying commission for something that's 5% versus negative 0.1%? I was furious with my brokers. And then 2023 day one was like, here's your positive swap. So anyway, stupid stuff. All right, man. Hey,
Well,
did you
what about
take
gold? I want to look at gold too.
Okay, let's look at gold.
It finally came down very close to 2,600.
Okay. Are you long now?
No, I'm not long yet.
I'm not either. I'm waiting, dude. I'm waiting for 25.50. I'm not trying to get this thing early. Yeah. Let's let it fall.
I guess so. So there's a trend line too. If it comes down 25.85, I'm seeing.
Okay.
25.50 is more so a support level, previous low.
Yeah, I can see that. Yeah.
Yeah, I mean, I can see it. I guess if we have no more big news in the Middle East, this might start to come down.
So you think this recent so right where all the Middle East drama was happening and oil spiking, we actually did kind of top out here in gold. So you're saying that as the Middle East conflict resolves or just becomes a little bit quieter, that gold is going to be falling more?
I think it's going to help it to come down. I also think CPI might help because the sticky sort of inflation we saw today could result in less aggressive cuts.
That's true.
So they might be not pricing in such a low dollar after all.
Yep. So the probabilities are still pretty high that we're going to cut 25 by the end of the year. I do believe that the market for all of 2025, I believe the market has taken out about 50 basis points of cuts. So it's basically taken two small cuts off the table for 2025. So we would have 25 and 25 to finish out the year, and then maybe only have 1% all of next year instead of the market was anticipating like another 1.5%, and that's not looking to be the case. So that's been the biggest change for right now, but the probabilities are still very high. This is 88% that we cut by 25 basis points, and then December, this would be a pause.
Yeah.
So I mean, this is interesting that there's even three options here. This would be that we would cut rates by 25 basis points in November, and then we'd increase rates. That seems stupid, so that's probably not going to happen. Obviously, that's the smallest probability. But we would maybe pause at 13% probability, 86% we cut again.
I kind of feel like they should pause. I honestly didn't even agree with the interest rate cut.
Well, I think they should pause through. They should pause and assess through 2025. If the Fed wants to win the battle of inflation, they should definitely pause in 2025. And I don't know why they're going to cut for the rest of the year. I mean, honestly, I'm happy if they're going to cut because hopefully influences a little bit of the 30-year mortgage situation as I'm buying a house. But if they don't cut and they don't cut any more, then I don't think the market's going to love that if we're sitting here at sticky highs, battling inflation, stock market all-time highs. A lot of this upside that the market's seen has been because the Fed was supposed to go on like a 3, 4, 5, 6, 7, 8 cut cycle, and we're talking about maybe having 1 to 3. That's a big change for the market to all of a sudden like backpedal on. So,
yeah. And it's not like the jobs market is cracking. So
not cracking.
There isn't a real need for a cut.
Is or is not? There
isn't.
Yeah. I mean, we say that, but we saw the job market literally making cracks through June and July. I mean, this non-farm print was like the best one we had seen in like 5 months. So, but continuing jobless claims, initial jobless claims, those are still like historically low. I mean, I think that the numbers too, I mean, they're a little misleading because we have a much bigger population than when we look back and see like the unemployment rate I mean, for the fact that we're at 4.2, 4.1%, that's pretty impressive considering we probably added millions and millions of people to the workforce. I dissected the non-farm payroll thing again. yesterday, and it was mostly leisure, healthcare, and government. That's where most of the sources are coming from now. So job reports, government-wise, they could be revised. Non-farm could still be revised, but most of the jobs are coming in the service sector and healthcare.
Yeah. Well, last thing then, what did you want to look at on the S&P? Because I'm wondering myself. I took a bull put spread this morning.
Okay. What's your low? Did you put it right around today's low, at like 57.65 or something?
It is.
How tight are you?
It is 57.70 is the threshold.
Damn, dude, get right up in there. What'd you pull in credit wise?
185.
Okay. So 315 risk.
Yep.
Okay. What's your I just got to ask you, what's your win streak with these little like bull put spreads you've been throwing on there? I've been just seeing like close for profit. You got to be doing pretty well.
Not
Last couple
counted.
Okay.
If I go on Discord, I can look. So far, I've taken one loss.
Okay.
But I don't know how many trades in total.
Yeah. It's been a good couple weeks, right?
It started, late September. So let's see. So the first one was the 24th. 1, 2, 3, 4, 5, 6, 7, 8, 9. So I'm on my 10th one. So
Okay.
I took 8 out of 9 wins.
Nice.
On the 10th trade now.
Nice.
So
Here's my assessment of this is SPX. I would say this based on today's low, which is also the previous 2 weeks highs. If we stay above 57.65, this market is still pretty postured to just stay where it is, or maybe try to melt up more. I do think realistically, if we get below 57.65, there is some decent room to have even just the same noisy pullback zone to like 5,700. That could happen like pretty swiftly. But I've said this all week. It's like I can't sit here and be a bear when the market doesn't suggest any price action that's going down. But because we did take out these previous 2 week highs, if it gets back below that, then it opens up the market to revisit the weekly lows. That's all. So that's probably my cleanest outlook on the SPX right now, which is if we just stay choppy. We still have PPI tomorrow. What is that forecast for tomorrow? So we're looking at month over month unemployment rate. So that's Canada. Never mind. That's CAD news for jobs. So we have month over month core and regular PPI. So green, red, we'll see. I don't know if anybody's tracking like a year over year PPI, if it's been higher or lower. I just thought this was an interesting print today to see the market not really react to it at all. I mean, everything was up higher. Jobless claims were higher. Unemployment claims this week were higher. But I suppose 2.5 to 2.4 is like good enough, says the market, as it's just going nowhere today. So
yeah, I mean, it did come down. It just didn't come down as much as they expected. Core didn't move. But
I mean, it did move. Core year over year core is 1/10 higher. So it was sticky at 3.2, but it's up 1/10 higher. So, and that's excluding food and energy, which is supposed to be the Fed's way to like make it look like inflation's improving, but really it's still sticky, man. I mean, we have core CPI over 3%. Now, what is the 2% target the Fed keeps talking about? Is it core CPI at 2%, or is it all CPI at 2%? Which we're not there, and we're nowhere close to there.
They're not going to tell us.
No, they won't. But I'm saying like that's what's so annoying is the year over year that's trending lower. I still go back to that truflation reading that is not anywhere close to those lows we saw. And I think that's what our inflation is going to look like. I think the reads that we have in our inflation index are going to look a lot like this. I think right now our 2.4 that just printed is this low. So I'm going on record now in these sessions like I think our 2.4 is this low, and for the next 3-4 months this is actually going to go higher.
So having said that,
yep.
Are you capping? Are you bottoming on oil then? Are you calling that as the bottom?
No.
Nope.
I mean, no, I think that, I mean, the only way that inflation goes down harder is if oil crashes through that $65 floor, which can happen because prior to all the Middle East conflict that was jumping price up and squeezing oil higher, it was Saudi Arabia wants to take prices down to $50. Right now, do you know the U.S. is producing more oil than Saudi Arabia and Russia combined? Like, we
think
are
they
the
do
biggest
that.
producer in oil in the world right now. So we have, and believe me, if we want to battle inflation, we need to pump oil like crazy because that's the only thing that's going to combat it, right? But if the Middle East conflict all of a sudden throws off prices, oil's not going lower, but I'm not calling the floor on that. No way. But I
Yeah.
think for inflation to be a victory, oil's probably going to have to crash below $60. I think if the U.S. is going to see CPI below 2%, we're probably going to have to see oil under $60. And I don't know what that looks like because under $60 oil is going to be more of a strain for margins on all these other countries, not for us, not for Saudi Arabia, but for a lot of other countries that are oil dependent. They can't afford to see oil below, $55 a barrel, $60 a barrel. They want it higher, And
Right.
so then you'll have all the games of we're not going to produce it, we're going to cut our supply, blah blah blah. So it's I don't know. There's so many dynamics when it comes to the supply and demand of oil, and then the geopolitics on top of it. But I really think that for the U.S. to have a successful campaign against inflation, we do need to see oil prices continue to fall. So I'm not long oil. I don't want to be short oil. If I was going to be short oil, I would be short at 85 or $90 because I'm not shorting it now. I'm not that interested in it now. I don't think the price is that good. So oil at, $75. I mean, I'm not going to short it there. I want to see if we can squeeze up. If we were to floor here and resistance here, if we have a squeeze up here that's especially inefficient, I would look to maybe take some stabs that way. But if we get through this floor, it's like there's not much to stop it to the downside until like $55 or $50. And I think that's where I think a lot more problems will arise with how vocal, OPEC's going to be, how vocal other members or oil dependent nations are going to be. That might be a faster, more aggressive migration away from the dollar. It's like all these things play into it. Because this is where everyone can, we can fight about it, but no one's really hating the fact that oil is stable between like $70 and $90. But if it gets lower, causes problems, gets higher, causes problems. So I don't know, man. Oil might be the thing that breaks the market or, causes war or doesn't. And that's a lot. That's a lot.
I feel like oil has bottomed. I would say like in a monthly time frame is probably established that low.
So are you comfortable? That's why I had the $65 levels. I mean, I did a $65 put. I did the 65 by 40 or 65 by 64 credit spreads, and I was trading the futures market. But because it became more geopolitical, I'm like, well, this isn't just normal price action. This is, influence. So we had the commitment of traders and hedge funds, and everyone was net short oil. So it was a contrarian trade. But the fact that we squeezed and we didn't take out really any substantial highs here, I'm just, I don't know, man. I'm not that impressed with oil at this time. I don't know. I think it looks decent, but I would not want to have undefined risk on oil. I'll say that because I think there's definitely risk to the downside that could get very ugly very quickly. But a credit spread, no big deal, right? If oil is going to go up from here, that's fine. But I think you and I have talked about this. Oil price right now going into this election is probably going to be pumped out by the U.S. in a big way to keep prices contained. Inside the $70 and $80 mark, this is kind of my toss-up zone. If oil's between $70 and $80, I don't think there's any clear winner between the election. If we're down below, probably favors Harris. We're up above, probably favors Trump. Why? I don't know. Just because it's usually the incumbent. If oil prices are steady and lower, it favors the incumbent. If oil prices are higher, somehow it favors the challenger.
Okay.
So anyway, yeah. So I think oil right now is going to stay somewhat quiet. And honestly, I wouldn't be surprised if the headlines just start to fade away. Like we're not even talking about this conflict anymore. It's like we still have a war going on in Russia, Ukraine. It's been what, 2-3 years now? It's still going on. And now we got heavier conflict in the Middle East. It's still going on. So anyway, we'll see, man.
And that's the sad thing is that although it's going on, it doesn't matter unless we're talking about it.
I know. And that's what I'm saying. They just like, yeah, just put it to the side. It's not as important. Let's talk about Hurricane Milton. Anyway. So it's a price to watch. It's going to matter. I am thinking that our 2.4, and I'll come back and reference this. I'll remember this conversation. But if this low is representing the 2.4 that just printed for us right now, here's another thing too, Frank. If China comes out with they're having like another conference or summit on the 12th for maybe this discussion of stimulus. If China comes out with more of like the affirmation and the reassurance that they're going to promote more stimulus and support the economy, then that increase in PMI will also be inflationary. So even though you have economies 1 and 2 in the world that are basically adding stimulus, monetary policy, fiscal spending, government support, that's inflationary. That's without oil. That's without oil being a part of it. So I don't know. I don't know what our 2.4 looks like unless oil is going to crash. That's how I think our CPI numbers get lower. But if we have China supporting and we're resilient and our job numbers getting better and wages are going higher, I think that's inflationary for the U.S. So all that means is moving forward in 2025, the Fed is likely going to be not as aggressive to the downside. They won't cut. The bond market's probably going to suck too because everyone thought the bond market was pricing in the rate cut cycle, and all of a sudden it switched to, well, now the market's more risk on, not risk off, and so the bond market has tanked pretty much since the Fed announcement.
Yeah.
So anyway, so here is the futures market again. This morning we are stuck within the same range that we had with the 8:30 reaction during CPI. So this has been a very tight trade today. Here's what I'm going to look at probably for the next trade this morning. If we reject off of this high, I might look at this as a chance to sell. I'll probably do MES or MNQ, one of these two, MNQ. If we get a rejection, it just stays within this range. I might get a trade that's about 150 point move on. Is that right? That ES? No, that's Nasdaq. So about 150 point move high to low on Nasdaq, and about a 30 point move on ES.
Yeah, I would say watch the consolidation, because if it stays like this till like 2 p.m. or something, we've seen in like Monday, I think, the price just didn't move.
Yep.
And then
but then afternoon,
we had this huge afternoon sell off.
Yep.
So like 12:45. So starting at 1 was a sell off, and then 2 was the major move. So if we are consolidating, that's what I'm worried about. If we just are not moving, I'm afraid that we're going to start selling off late afternoon, and that's going to really hurt my bull put spread. So just being wary of that.
What would you for any of those trades that you've taken that you're this is your 10th trade you've had, you don't close, so you let it go, it settle at expiration?
Yep.
Okay.
It's not the best sometimes,
right?
Because if I feel uncomfortable, I just get out. But
well, if you do the math, I mean, you got 9 winners at, let's say, $1.50 each, right?
Yep.
Okay, and then you have 1 loser at $3.15, so minus 3.15. I mean, if you did 1 contract, I mean, you're up $1,000, dude. Just because you've evolved to great levels.
I was up a little over $1,000, and then I took the first loss.
Okay.
And that was, I think my total now is 800 or 900 something.
Okay.
And then today we'll see.
Yeah.
But yeah, the goal is to win a lot on these, because your losers will be, like if I'm taking $1 to $2 credit, my losers are going to be bigger than my winners.
Correct.
So you have to have more frequent winners than losers, and it's almost like an experiment too. I'm just trying to see.
Yeah. Think about the if you can collect 1/3 of the width. So if you go 5 wide and you can collect $1.50 or better, that helps your win percentage. I wouldn't take a lot of these trades at $1 credit or less. I would try to keep to that like $1.50, $1.60, $1.75 credits. That will help pad your stats.
All but one have been like $1.20 or more.
Okay.
Like I've even taken $2 trades.
Good.
But the one that I lost, unfortunately, was the smallest credit I collected.
Yeah.
So that's
how it works, man. That's
on a $5 spread, I lost 400.
Okay.
So.
All right. Well, you got some winners to pad it. Let me take. take a look here. So P&L wise today, I mean, I'm fine. Let me actually, one thing I didn't look at today, let me take a look at China. So futures wise, this is what I'm going to be watching for the rest of the day. I'm just going to see if I can get something in the futures market this morning. Maybe it's a rejection here and then a sell trade. Something. I mean, I've got my my Hekinashi candles here on the right-hand side. These are 5-minute candles. So if I can see this get up to the high and then go red, I'll probably take a trade right there and just see if I can grab 20, 30 points out of ES, or maybe 100 plus points out of the Nasdaq. But if I go to China today, we're back in green. So HSI is up a couple percent. We pulled right back off that 382. We gapped higher today from the close. That's a little bit encouraging. Alibaba is up a little bit. Baidu off the 38% level. FXI bouncing off that 30% level. KWeb off the 30% level. MCHI, same thing. JD, same thing. So, all right, stable. That's better. And then we have more of the news on the 12th, which is going to be this weekend. So maybe we come into trading next week and there's a little bit more support and clarity around what's going on with this China stuff.
Yeah.
So food for thought.
Yeah. Well, what else?
I saw Trader X asking about euro dollar. On the dollar stuff, I mean, euro dollar, it's the same thing as trading the inverse dollar X, right, or DXY. So euro dollar right now, I look at this. A lot of dollar pairs, I mean, you can see the DXY and the euro dollar potential range. So if I box this in here, I would say that structure looks pretty clean, as well as these lows between 106 and 105. This is probably my trade on the euro dollar. Nothing right now, unless there is a really simple, we pull back here and then we go lower, and we continue to have dollar index going higher and we have euro dollar going lower. But again, if euro dollar comes back to 105, I'm pretty interested in maybe buying 105 back to 112. It's just a range trade. The DXY is still in a range as well. I know there's been a lot of talk about like, oh, the Eurozone, we're going back to parity on the euro dollar, maybe. But that was the easiest. I mean, that was such an easy buy trade, dude. Even though it was like, why is this thing dropping from 120 to 96 and it crashed through parity? But this trade right here was so easy to buy. So if we came back down to this structure low, or came back into this area to then start dollar cost averaging at parity, I would happily buy some euro dollar at like parity to 98 to 96 and just position trade the crap out of this thing. So right now I see a trade that if it pulls back and it goes for a lower high, lower low, there's a good trade there on the euro dollar, but that means DXY goes higher, which is okay. It can go higher.
It might mean markets lower too.
It might mean what?
Markets are lower too.
If the dollar goes, I mean, I firmly believe that if the dollar goes up, we're not going to be at all-time highs in the freaking stock market. I don't know how that would be the case. It can happen. I've seen it happen with dollar strength and, you know, markets are higher, but like it's usually better when the dollar's weak, the markets are ripping because you've got commodity prices up, you got risk appetite across the board, you got animal spirits like that are going nuts. But dollar strength does not usually translate into stronger stock market. So if you know, this is the same thing. It's the inverse of the euro dollar. So if we pull back here, we go up again. I could see that, but we have lower highs for right now. And so if we pulled back into this area and then reject on the dollar, I like that sell area for the dollar. And obviously I like this sell area for the dollar. I don't think the dollar index is coming back here, Frank. You know, I think we're stuck in this range right now. If it even comes back to test the 107, 108 zone. But I think the dollar index is still, this is a squeeze because it was just 3 or 4 months of trending in bear trap city. But if we come back into the, you know, push up, pull back, push up here, if this starts to get faded, I like that trade back down to the same lows. And if we can break those lows, then that to me is the exciting trade in the dollar. That to me is if we want to see gold rip and Bitcoin rip, the dollar breaks below 100 convincingly, then we've got some exciting stuff happening in probably dollar alternatives. So gold, silver, oil, probably. I mean, anything commodity based. Copper could be pretty solid, but I'd say gold, silver, Bitcoin could be like awesome trades if we're breaking below 100 on the dollar index. So,
gotcha.
But that's it, man. All right, so my tracker for the day, I'll be watching NQ, ES, and probably the MES, MNQ. Same feed, just micros. So this one is a 50 multiplier. The MES is a 5 multiplier. The NQ is a 20 multiplier or a 2 multiplier. Depends on if you're trading the standard contract or the micros. But I might try to make a couple bucks if I get a range trade out of this. It's doable. Tomorrow's CPI tomorrow's PPI will PPI cause bigger. I have no idea, Jacob. I mean, I thought today's CPI was actually going to mean something, but per price action, it's meaning absolutely nothing. But like Frank said,
I think
there
it
could
will
be some
move.
afternoon stuff. Like, be careful the afternoon today.
I think it will affect us. I think I've seen this before where PPI causes delayed inflation reaction. So today it might not know where to go, and then tomorrow, say PPI is higher.
Yeah, that's true.
We could get a bigger sell-off, I
Bigger
guess.
reaction. Yeah, just a bigger reaction. Because, that's a good point. Because last week was all employment news, right? And the market digested that as is, and non-farm was a big beat. And then this week it's CPI and PPI. And if they both show stickier, higher inflation, the market might take that as a time to react. So that's a good point.
Yeah. But yeah, I guess we'll see.
All right.
But,
well, man, thanks for jumping on to 11:03. Nice to hang out for 30 minutes with you.
yeah,
Yep. All right, and good luck on your bull put spread. I'll be watching. I'll try to get a trading here. So if you're in the Pulver Alert section, I might be throwing on a futures trade. So keep an eye on that for the Discord. And I've got a couple of trades on the SPY for Friday and Monday, and then the rest is just trying to stay out of the way and not do anything silly and not overtrade. Be patient. Wait for some levels, and that's it.
Yep.
Cool.
Sounds good.
All right. Thanks, Frank.
Thank you, Chris.
See you tomorrow.
Thank you, guys.
All right. See you, everybody. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.